Monday morning, folks, and welcome to the penultimate episode of FinMet Mondays for 2023. Joining me is Mr. Sunil Kashyap. Sunil, a warm welcome to you as well. Let's quickly go through the outlook for the coming week and where gold is likely to end by this year. Firstly, Sunil, we are around the 2020 mark on the daily charts for spot gold, US spot gold. The important thing to note here is last week I had outlined that 1975 is where we're going to see our first level of support, and 2048 is where we're going to see some level of resistance. And exactly from last Friday, you've seen these lows being touched and these highs being touched. So what has happened after last week is we've gotten a range where people are comfortable buying and selling. And I think this is going to be very important. The 2050 to 1975, we had this $75 range where, depending on what the mood and the sentiment of the markets are, prices are willing to move higher and below in this range. Secondly, we do see a confluence of supports for gold. So definitely going into the year end, there is a lot of backing for gold, even on a technical level. You see that there is this ascending trend line right here. This is going to be very important and critical for gold to maintain its bullish run up. You also see that there are some EMAs, 20 EMAs, 50 EMAs, exponential moving average lines that serve as support lines. So there are a couple of supports here, in addition to the 2000 psychological support, in addition to last week's 1975, where you have multiple stops before gold will see more follow through selling. It's very difficult at this point in time to see gold lose more than it already has in the last weeks and even months, right? Coming to the outlook for the next week, what I do think is going to happen is we are going to see this range from 2050 to 2000 tested on either side, depending on how the data comes out. In the economic calendar for next week, on December 21st, we have the GDP growth rate. And on Friday, late just before the Christmas weekend, we have the PCE price index as well. As if you remember, not long back, last month, PCE index had come at 3%, which was the lowest inflation reading that we had seen in the last, 24 months. And it was surprising. And that's actually what helped gold really rally last time when the reading came out. And we are forecasted to even hit a lower number this time of about 2.9%. So it'll be interesting to see how inflation data also plays into this narrative of gold maintaining its bullish run and kind of making that move up above.
I think clearly we're getting into a slow period now. So one can expect that the volatility we've seen is going to be slowing down. There'll be less volatility. In my belief, I think gold's going to slide towards 2000, and we're going to close the year just below 2000. That's what I expect. Just in terms of a lot of the overshooting of the gold price should get adjusted in the coming days, and will settle around 2000 is where I think we will be.
Yes, I think I agree with that. And let's see, on the charts as well, there is proof and there's some sort of evidence for why that move up to 2050, 2080 seems to be a little bit difficult going into the end of the year. Well, thanks, Sunil. Let's see how the markets play out in these final couple of weeks in December. But till then, thank you so much and goodbye.